All right, guys, welcome back. SPX S&P 500 update. So week is over, long weekend. So let's have a look at what I'm looking at from here for the markets for the rest of February and for the rest of Q1. So 40.80, that's where we closed. And this is a weekly performance of the S&P 500 SPX. So Monday, we gained pretty nicely. Tuesday, pretty much non-event, chop up and down. Wednesday, same thing, gaps down, tries to recover, fill the gap. Thursday, gaps down, tries to fill the gap until a few Fed members spoke about possibility of higher than market was pricing in. My market was pricing in 25 basis point rate hike for March. And when they started speaking about that, market pretty much started selling off. And we gapped down today, tried to recover, fill this gap, and pretty much that's where we closed. And maximum pain for SPX was around this level, 40.60, and a lot of people lost money to the upside and downside. So pretty big option expiration, monthly option expiration. But how the sectors performed this week. So let's take a look at just this week, and you can see overall pretty much not much except for energy standing out, right? Versus last week when everything was pretty much all the tech was getting pulled back while consumer defensive, healthcare, and energy was catching a bid. But energy sold off after the news that basically Biden administration releasing more gas from basically oil from reserves, and that's when it started getting hit. So energy pretty big down. Tech, you can see pretty mixed. Consumer defensive, that's where money went. You can see it right here on just by looking at today's performance. Money went to a little bit utilities, defensive, healthcare, industrials, and energy was 3% down. Technology, basic materials, communication services, real estate, consumer cyclical. These names were down. And weekly performance, you can see now 5% down energy. And most of it, again, came on Friday. So basically Thursday, Friday. And you can see what stocks did well this week. Consumer cyclical, defensive, industrial, utilities, communication services slightly higher. Tech, financials, basic material, they're taking a break. They didn't do much, but there are some tech names that got hit pretty nicely. But that's the theme. That was the theme this week. Not much. And this is the year-to-date performance of overall market. And I was just going through the names, and you can see like on a heat map that like the best performing stock after today's market close so far in an entire market is Tesla, 69%. Here's the list of like best performers, but by looking at the market capitalization, like the contribution wise, Tesla, Nvidia, and pretty much Facebook, they are the most the best performing stocks in S&P 500 so far in the first 2 months. And are they going to continue going higher? You can just go through the individual charts, but it doesn't look like it because of how far they have come. And even if they don't go down, if they just take a break, you can expect overall market dip pretty much. You can see year to date still healthcare down, energy down now, and defensive names pretty mixed, and still semiconductors, tech names, communication services, cyclical names holding up, financial names holding up nicely. Going forward, so basically from here, I would pay attention if we're going to get some sort of a rotation and market starts basically. So if you are following FedWatch tool, 32 days, next FOMC meeting, 22nd of March. You want to pay attention to this, where if market starts pricing in 50 basis point rate hike for March, you can expect market pretty much dip more. This was pretty much 9% in the beginning of this week, probability of that much of a rate hike. Now it's 18. So, and also you want to pay attention to May and June, how those are changing, because people, I mean, as days go by, if the probability, if people bet more, that if people believe more that Fed is going to raise rates higher than what market has already priced in, well, market will price in higher rates, and you can see overall markets, I mean, not everything, but the high risk, high growth names basically get hit, which are performing the best right now. So high yielding names, pretty much, I mean, these names that have been contributing to S&P 500 rally this year so far: tech, semiconductors, communication services, some cyclical names, financial names. I wouldn't say they did too much of a hard work, but yeah, these names, you gotta watch out these names, because these names are already up nicely. And even if they don't get hit, if they just take a break and start pulling back slowly, I mean, market will come down. So, and what I'm gonna be watching going forward, so I would be cautious with these names that are up nicely. I don't think Tesla can squeeze much higher, because the reason why I'm saying it's squeeze, because by looking at the chart of Tesla, you can tell, I mean, the volume is still significantly higher and 100% up from the bottom, and best performing stock all the way. Of course, they have a Tesla event March 1st, but careful with these high runners, and maybe I would pay attention to the bottom performers, like worst performers of the S&P 500, and see what's going on with those names. Maybe they are a little bit more attractive, like to play in terms of like a swing trading, maybe, because I'm not like a portfolio manager. I'm just a trader, but I still pay attention when this shift happens, rotation between sectors. I want to know it, and I want to basically participate in that rotation. Like if I have to short tech and then long these defensive names, healthcare names, I would be, I mean, I want to know what's going on, like in that moment in time when this rotation is happening, because it presents a decent intraday daily opportunity to trade these names, because you can just notice, like when money moves, it doesn't happen like overnight. It happens slowly, and you still have a time to react to that movement rotation. So maybe there are some names to look up here, even though like worst performing stock looks like Lumina and Enphase Energy, 23% down, 26% down. But overall, you can see, I mean, there's not much of a discount as far as yearly performance goes. But one thing for sure is that, well, these components that are up 50%, 60%, 70%, I mean, you want to be cautious with these names, thinking that these can keep going higher from here. So that's that. Another thing I wanted to share here is, we talked already about that SPX put to call ratio. Put to call ratio is still high, and it was high for quite some time. So that's another thing. What else? And also these big names that I was watching, like tech names. If you take a look at just today's performance, there are some dip buyers who came in to buy some calls in tech names. So yeah, that's pretty much it. Well, that's the update for the weekend. So see you in the next one.